Hva kan finanssektoren gjøre, og på hvilken måte kan den bidra som en motor for grønn vekst? Det skal vår neste taler, seniorrådgiver i Bank of England, Michael Sheren, snakke mer om. Gi han en varm applaus.
Good afternoon. I must say, those last four were just amazing. I think it was Mae West who said, you never want to get on a stage in a performance when you've got children or animals. In the world of sustainability, you never want to come on after the tech people. They're amazing. They just capture the imagination, and they really kind of set a pace for what we're trying to do here, how to envision a world that's transforming itself and transitioning itself. Now, this afternoon, I'd like to talk to you about a few things. The first one is, why would the Bank of England, the G20, and the FSB care about climate change and sustainability? The second thing I'd like to do is talk a little bit about green finance, both within the EU and in the broader context, what the world's doing to help finance these great innovative things and how we can finance a transition. So, notice little resemblance between the two. And what you see there is the Bank of England, how we look at how to address climate change and how we address sustainability. So the first thing you need to know about the bank is we have a very wide remit, actually broader than many other central banks. We have our monetary policy, we have financial stability, safety and soundness of markets, and we're also the regulator of insurance companies as well as the banks. So that gives us a very broad remit, which makes us, or allows us, to take a look at a broad amount of risks. And that's the first portion of this talk I'm going to address, is risks. It's not the most exciting piece, but if you don't build a strong case for evidence base around the risks, it's very hard to get policymakers, business people, and other stakeholders to take the transition seriously. So as a central bank, our focus is on the financial community, and we're looking at where are the financial risks that can be caused by climate change. Actually, real quickly, again, as you can see, we have a prudential on the left, which is around our banks and insurance, but on the right is the systemic risks. And I'm going to spend probably the most amount of time talking about that. And the systemic risks are what could happen that brings financial instability into the world. You've probably seen this. We have both transition risk and physical risk. The physical risk the United States saw with the latest hurricanes, but what people didn't talk about as much was also India got hit horribly. Mumbai was under flood, and I think there were about 2-3 million people that were displaced. The physical risks are becoming more frequent and more intense, and that's something that we all know about and we're starting to see. And when the bank did some of our early work around the risks embedded in insurance, we tried to understand how insurance, who would basically take a look at storms and say, well, we'll insure against those, but often their models wouldn't take into account risks around trans-jurisdictional weather patterns. So they'd be insuring something in Europe and something in the United States, and they thought the two weren't correlated. But now we're finding out through weather patterns and tremendous amounts of evidence-based research that they are. And we're also trying to understand the attribution effects, that is, how much of that intensity and how much of that frequency is caused by climate change. This is very complex work, and it's extraordinarily detailed, but there's great, great work going on in the universities as well as in the insurance companies to understand that. And then there's transition risk. And this is the most interesting risk in the short term. And the last four speakers are perfect examples of a global economy, how it's transitioning. And there are going to be both winners and losers. There's going to be opportunities. And probably the one that you've heard the most about is the stranded assets and the fossil fuels. But it's broader than that. And I think a good example of that is the automobile industry. And when you talk about, well, some of the OEMs may or may not transition. But even the ones that do, it's going to be massively disruptive in how you change. The way you can take apart a car, well, you have people that are providing all those parts and pieces. It's your supply chains. Supply chains are complex, and they're very sophisticated, and the risks around those are important. And the reason the bank cares about this, and the reason the FSB cares about this, is ultimately, if you've got problems in the real economy, you certainly have extraordinarily large problems in the financial community. Now, again, economic growth and inflation are part of our macroeconomic issues that we look at, and I'm going to canter through these quickly because I want to spend most of my time on green finance. Also, in terms of economic growth, if we look at the reduced availability of energy supplies and shortages, and we spend a lot of time modeling these issues, what are the possibilities? What are the upsides and the downsides? Inflation, what about fluctuations in energy prices as a result of shortages? Now, monetary policy, a lot of people talk about the modeling. Well, we do model, and one of the things that gets asked to me a lot is about quantitative easing, green quantitative easing. What's particularly interesting about that is when a green bond is basically sold, no one actually sells them on the secondary market to be purchased for quantitative easing. Very little of it is actually purchased and is available, so it doesn't get purchased. I'm going to skip very quickly through these. I want to talk about the FSB task force briefly. Now, as most of you know, what it's about is how do you disclose in a uniformed way what your carbon footprint is? And I think this is a great opportunity for corporations to start looking at their business model, because the path of travel really is going towards disclosure on a voluntary basis, and then potentially on a mandatory basis, because what you're trying to do is not just disclose, you're trying to understand what the risks are around your business model and the level of carbon you're emitting. If you're not analyzing your business model and looking at how it will change, and we heard people talking about that earlier today in the oil and gas industry, ultimately, you may not be sustainable going out 5, 10, 15 years. So it's really an opportunity to look at the business models. Now, the next thing that's particularly interesting about this is businesses are being asked to voluntarily disclose, but technology is catching up on them quickly, very quickly, because ultimately, if you don't disclose, satellite thermo imaging will actually help you find out what you have, whether you like it or not. So people will actually not have a choice if they don't start disclosing, and this will provide a tremendous amount of information for policymakers. Now, this really quickly are some of the tools that we use to look at market, credit, and underwriting risks. And to be honest, these tools are exactly the ones that bankers use. It's IRRs, it's VAR, and things of that sort, but they haven't been looking at them. They get it. This is not a new thing. When I was a banker in the 80s back in New York, I did real estate underwriting, and we had to do an environmental report. If we didn't, we wouldn't get financing, because if there was contamination underneath where the building was going to go, you wouldn't get financed. Well, guess what? We now have new environmental risks, and they need to be taken into account. So again, it's not a new thing, it's just newer risks that we better understand. But the bankers need to make sure they properly take account of those, because otherwise we have financial disruption. Now, green finance is absolutely urgent. I'm very lucky. My co-chairman at the Green Finance Study Group is Dr. Ma Jun from the People's Bank of China. We've already seen our colleague from China, what they're doing in BYD around electric engines. China is shooting ahead. They're doing brilliant work, and they're not doing it just on the industrial side, but they're also doing it on the regulatory side. If you want to have a green bond issued, you get to go to the front of the queue. They've got an extraordinary amount of work that they've put together and that are helping advance a sustainable world. But it's not just the Bank of England, the PBOC. I can tell you that we had the Dutch Central Bank into the BOE last week. We speak to the Swedes all the time, that basically we are no longer alone, that central banks around the world are seeing the risks, but they're also seeing the upside to green finance. That is what's going to finance the ultimate transition. Now, the good news is there's roughly 100 trillion of institutional money available, and that's insurance companies, pension funds, sovereign wealth funds. Less than 1% of that is currently being used for anything green or sustainable. Now, how do you mobilize? How do you get that institutional money thinking about long-termism? You heard people talk about it earlier today. Long-term investments in sustainable infrastructure, corporations, and transportation. That's the challenge we face right now. And the G20 is doing some fantastic work around that through our study group as well as the infrastructure group. But that is where the mobilization will actually help us make the next step. Now, if we can do that, we will have a forward-facing global economy. If we don't do that, the risk involved in this from a financial point of view, which will trigger right into the real economy, is quite catastrophic. Cambridge University did a model using behavioral economics, and this is again a transition risk. They said, what if some of these institutional investors who get it, Norges Bank, AXA, Aviva, and by the way, they weren't around, those investors weren't investing in this even 3-4 years ago. What if all these investors decided they needed to get into green very quickly and moved out of the brown ones. Well, guess what? That's systemic risk. And ultimately, they named this research report unhedgeable risk. It's systemic. It would have huge implications in the global economy. So the ability to mobilize this money, the ability to get our pension funds, our insurance companies thinking about the fiduciary responsibilities they have to their annuitants, that the responsibilities that they have to long-termism. And I guess the quote I need to end on is the one that my boss made famous in his speech at Lloyd's. It's a tragedy of the horizons. If we're not thinking long-term, if we're not thinking about how do we finance the transition, the implications are quite profound. And that's why both central banks should look at these things and why they are looking at them. And secondly, why green finance and mobilizing that money is the key to a successful transition. Thank you very much.